If you try and fail, congratulations. You are one step closer.
Abundance Stock Advisors. Let's make money.
Hello friends, welcome to Abundance Stock Advisors. For many such amazing videos, please subscribe to our channel and hit that bell icon. Friends, before we start, I wish to tell you that you can download 36 life-changing training ebooks related to overall finance and abundance absolutely free from our website. These books will ensure success in the three most important pillars of life, that is wealth, health and relationships. The book titles and the download link can be found in the video description below. Now coming to the topic. So what are these penny stocks and should we invest in them? So stocks which are priced like 40 paise, 60 paise, 2 rupees, 5 rupees are called penny stocks. Some institutions classify stocks less than 5 rupees as penny stocks. And for some institutions, stocks less than 10 rupees are penny stocks. So there's no written rule per se. These penny stocks show an investor a big dream of becoming rich overnight. So in this video, you'll get to know if achieving this dream is really possible. Stay with us till the end of the video. At the end of the video, you will be able to make a decision very easily if penny stocks are for you. Now, these penny stock companies are usually very small with a very low market cap. You cannot find any information regarding them very easily. But these attract an investor very easily because they can rally very, very fast. And because their prices are very low, they trick an investor in believing that they can buy huge quantities of their shares in a very small capital amount. And friends, penny stocks are very volatile. They can move in any direction very quickly. They can double in a month and can crash in like 25-30 days. That's it. Many investors fall prey to these tactics of penny stocks. They want their investments to grow fast. They want it to double in a month. And in this greed, they purchase penny stocks. But trust us friends, investing in these stocks, these penny stocks, is a blunder for any investor. So let's see with an example what happens when you buy a penny stock. These stocks, they play a very psychological game with an investor. Let's assume our retail investor friend, Mr. Rahul, has 1 lakh rupees to invest. Now, MRF share is trading at 10,000 rupees and a penny stock, FCS software, is trading at 4 rupees. So this penny stock of 4 rupees attracts Mr. Rahul. Psychologically, he feels that if he buys MRF, he would get just 10 stocks. But if he buys FCS software at 4 rupees, he would get 25,000 stocks. If FCS software goes up by even a rupee, he would earn 25,000 in one shot. That's what he feels. And he also feels that it is very easy for any stock to move by 1 rupee, and so he expects FCS software to easily move up by like 1 rupee. It's very psychological, very psychological. So he falls for this trap and purchases 25,000 shares of FCS software. Now let's see what happens with Mr. Rahul's investments. On 23rd September 2009, Mr. Rahul bought 25,000 shares of FCS software at 4 rupees. On the 12th December 2009, the share touched 9 rupees. In just 2.5 months, the share more than doubled. Wow. Mr. Rahul is very happy, very happy. It's a dream come true for him. Now, he wants to sell these shares and bring home the profits. Will he be able to do it? Let's see. On the 12th December 2009, Mr. Rahul places a sell order for 25,000 shares. but the sell order never gets executed. Strange. Why? Because the share is either facing lower circuit or there are very, very low numbers of buyers in this stock. And because of this, the order is not getting executed. Friends, lower circuit means that there are no current buyers for this share in the market. Now, though you cannot see lower circuit in this chart, but in many stocks, you will see circuits on a regular basis. Circuits are a quality of any penny stocks. The share today has fallen by, say, 5%. Mr. Rahul is positive and he places a sell order again tomorrow for those 25,000 shares. Again, the share may be in lower circuit, no buyer. The share has again fallen by 5%. He tries again the next day. It's the same story again. The share has again fallen by 5%. Friends, this story repeats, lower circuit after lower circuit, and one fine day, the share hits 40 paise. Yes, friends, 40 paise. You can see that. Mr. Rahul could never sell those shares due to lower circuits. His 1 lakh rupees has become 10,000 now. The whole amount has been wiped off. So why does this happen with penny stocks? The first reason is low liquidity, meaning very less number of shares are traded in a day. Trading volumes are very low. Second reason, upper and lower circuit, meaning on time you will not be able to buy them, and also at times you will not be able to sell them. When you would like to buy them, it would be in upper circuit, that is, you will not find a seller, and when you want to sell them, it would be in lower circuit. You will not find a buyer. Big problem, you see. The third reason is manipulation. Because there are low volumes happening in these stocks, any big player can manipulate it easily. Example, suppose a guy buys 1 lakh quantity of some penny stocks. With some marketing tactics, he creates news around this penny stocks to attract buyers. Friends, by the way, do you receive SMSs to buy a particular stock from like nowhere? This is a marketing tactic to increase buyers in a stock. This leads to more buyers and the stock prices just goes up. When the buyers come in and the share prices goes up, this guy sells his 1 lakh shares and he just runs away overnight. These buyers who have bought it, they get caught in this trap. So always remember, you always get what you pay for. Penny stocks are low priced because that's their actual worth. They are actually worth pennies and hence the name penny stock. So don't go by the price. Use your brains. Apni akal lagaye. And secondly, ignore all the media related positive stories around penny stocks. We have all seen what happened with Mr. Rahul, right? You know everything. So don't invest in penny stocks strictly. These are very risky and your money may turn to dust before you even realize, friends. But yes, if you are rich and if you have a very good marketing team, then these penny stocks can help you make a fortune. Huh? This marketing strategy was used by one called as Jordan Belfort, who is also called as a Wolf of Wall Street. He made millions before he was finally jailed. Remember that stock manipulation is a crime today. Huh? So abundant stock advisors never recommend penny stocks to their clients. In fact, we cannot, because you can never rely on either their technicals or their fundamentals. Now, some motivation. If you try and fail, congratulations. You are one step closer. Friends, did you suffer losses in the markets? Congratulations to you. You are one step closer to profits. Unlike others, you at least tried. So pat on your back and keep moving in the right direction. Just stay at the crease. Runs will come. Friends, just to remind you again, there are those 36 life-changing training ebooks waiting to be downloaded absolutely free of cost from our website. The book titles and the download link can be found in this video description below. For many such amazing videos, please subscribe to our channel and hit that bell icon. If this video has added value in your life, please like and share. If you have any questions, please let us know in the comment section and we will surely reply. Until then, thank you and Jai Hind.